Do you like saving money? Do you like money in general? Well, if you own a home, there's a very simple way to save some money in the long run. And I just wanted to go over that with you real quick. I'm going to share my screen here and show you what's called this is called a loan amortization schedule. Fancy word for what your schedule looks like as you make your mortgage payments. I'm going to run through a quick scenario here and show you how you can save some money on your mortgage or save money and interest on your mortgage. So we'll just use this as a quick scenario. You could Google this amortization schedule and probably download this exact Excel form if you want to plug in some numbers for yourself and see what they would be specifically for you. But we'll just go off of this one. So say you have a $300,000 loan amount with a 4% interest rate, a 30-year loan, which would mean you're making 12 payments a year. So your monthly payment on a $300,000 loan is $1,432 a month. That's 360 payments. The total interest that you pay over the life of the loan is $215,608. So many people have heard of putting money towards the principal or extra principal payments, however you want to say it. Really, every month you can put down extra money towards the principal balance that you owe on your mortgage. Keep in mind that every dollar that you put extra towards the principal, you don't pay any interest on. There's no penalty for it. You just put extra towards the principal to pay your house off faster without paying interest on it. So we'll do some quick math here. So extra payments, so extra dollar amount per month that you pay towards your mortgage. Let's say you do an extra $100 a month. What's that? The dinner out for a family of 4 or 5. That's if you can save an extra $100 to put towards your mortgage payment every month, right there, that brings the total interest that you'll pay over the life of the loan down to $186,861. That's a savings of over $28,000, almost $29,000 that you save by the time that you're done paying off your house. An extra almost $30,000 in your pocket. And that brings the total number of payments that you have to make on your mortgage down to 318 payments. So that's 3.5 years off of your mortgage. So if we increase that number, say you put an extra $200 a month. So right now your payments are $1,432. Say you paid $1,632 every month to pay off your mortgage. That brings the total of interest down to $165,000. If you get your interest down that low, you're going to save over $50,000 over the course of your loan. So that's by the time the house is paid off, that's an extra $50,000 in your pocket. And it also brings the number of payments down to 286, which is a little bit over 6 years off of your mortgage. And then we'll go one more. We'll just say 300, and that brings us down to $148,000 that you pay in interest over the course of the loan. That's saving over $67,000 from what you would have paid if you just made your regular monthly payments all the way through for the 30 years. And also, this is a huge number right here, 259 remaining payments on this mortgage. That's almost 8.5 years. So you could bring down how long. So think of that. That's 8.5 years that you don't have a mortgage payment that you otherwise would have. That's 8.5 years with $1,432 more in your pocket than you would have had if you just paid your mortgage for 30 years. So really think about that. If you have any questions about it, or you have any other types of questions about your mortgage, please feel free. I do this every day. I know you guys don't. So take the opportunity you could leave a comment here, and I'll answer any questions that you post, or shoot me a DM, give me a call. Either way, I'm here to help, and yeah, happy to save you guys some money. Thanks, guys. This is Mike at Eagle Home Financial.